So now it's my pleasure to introduce our expert analysis of the federal budget through Gavin Miranda of MNP. Gavin is the regional tax leader with MNP in the Eastern Ontario region and has more than 20 years of experience helping private and public companies with their tax compliance, tax consulting, and tax provisioning needs. Gavin is a CPA and CA. Thank you very much for being here, Gavin. Take it away. You're on mute.
Thanks very much. Pleasure to be here, and thanks for having us back. We enjoy sponsoring this event. So as Minister Fortier said, there was a lot in the budget, as well as what Hugh said, 725 pages is how long it is. So there's a lot to digest. I'll go through some of the technical items here, and Minister Fortier certainly went through the highlights in terms of, the national childcare, the investments in various sectors. And here we'll talk about how we digest that down in some of the tax measures that are coming up. So let's roll through this here, Caleb. Next slide. Keep going. Yeah, next one. So some of the highlights here, the budget is focusing from the emergency response that we're doing to recovery. So the COVID program supports extension of the CEWS and the CERS, which is the rental program. As Minister Fortier said, the new Canada Recovery Hiring Program. One of the big highlights was immediate deductions for investments in certain equipment, which will be very valuable to my clients and certainly to companies in the Ottawa area and Eastern Ontario, and interest deductibility limitations. They introduced a lot of things for consultation, but the good things that we didn't see were no personal tax changes in terms of rate increases or significant corporate tax rate changes. There's a lot of speculation on capital gains exemptions, which didn't happen, intergenerational transfers, and principal residence exemptions stayed intact. So that's all great. Next slide. So the emergency business support that continued on, keep going. The Canada Emergency Wage Subsidy and Rent Subsidy were extended to September 2021. The subsidy dates will gradually decline over the July to September periods as they try to slowly wean the economy off and have it into recovery mode. But the government does have the flexibility to add periods to November 2021 if they so choose. The CEBA loan that helped businesses that was funded up to $60,000, that's not going to be extended beyond June 30th. So if you need to apply, make sure that you apply for those support items. And the lockdown support for CERS extended to September 25th, and it's currently at a 25% rate. So in Ontario, obviously, that can be very useful to businesses and small businesses in this area. And once again, we thank the government for extending that. Next slide. As we noted earlier, this new program for the Canada Recovery Hiring Benefit is going to give eligible employers a subsidy of 50% of incremental remuneration paid to employees in the upcoming periods of June 6th to November 20th, 2021. Now, the eligible employees can claim one or the other. They can either claim the wage subsidy or the Canada Recovery Hiring Benefit for a particular period. Now, they qualify based on if they have the same drop in revenue, but the revenue drop is going to be a 10% drop in revenue compared to previously. So initial the pay period that you're going to measure yourself against is March 4th to April 10th. So next. The Canada Recovery Benefit was also extended to help people in this pandemic from 38 to 50 weeks. The caregiving benefit was also extended, again, supporting the recovery and helping people as we hit this third wave that we're going through right now. And the extension of those benefits, as well as EI benefits, can be moved further until November 2021 if the government so chooses. Next slide. So there were some corporate tax measures announced that we'll go through. So the budget introduced a temporary immediate deduction of new property. It doesn't apply to goodwill or buildings by a Canadian controlled private corporation, which is mainly a lot of the small businesses that are here in Ottawa and in the National Capital Region. This is for property that's acquired after budget day and becomes available to be used before January 2024. So it's a maximum of $1.5 million per year that you can just write off if you acquire that equipment. So that's an immediate deduction, which would generate investments and capital for companies that they'll use in their business, and it has to be shared amongst the group of companies that you operate. So we see this as a very important measure for companies in stimulating growth as they make investments, not only in jobs through their hiring program, but also in terms of capital investments. Next slide. The other thing that the government's introducing is to limit some interest expense. This is targeted primarily at larger companies and it will limit your interest expense, what you deduct to generate income. So if you borrow to buy equipment, or you borrow to buy, in your business to expand, it will only allow you to deduct a certain amount. So a fixed ratio of 40% of your interest beginning on or after January 1st, 2023, that drops to 30% in January 1, 2024. So it'll apply to new and existing borrowings as well. And we were glad to see, we have to see the detailed legislation on this, obviously, but next slide. We were glad to see that there are exceptions for small companies, those that don't have large capital bases in excess of 15 million. And that 15 million magic number is when you start to lose your small business deduction. So, they're really saying, well, if you're a small company, you need that financing. We're not going to limit you, which is great. It will also not apply to groups of corporations who have interest expenses less than $250,000. And so we want to see the further legislation, but this could have some impact to larger corporate Canadian-controlled private corporations as they grow. So we'll have to monitor that. But the good thing is that if you are denied this interest deduction, you can carry it back 3 years and forward 20, just like you can carry losses. So that's a good thing in terms of keeping that you pay the expense, and hopefully you'll keep getting the expense in another year. Next slide. So there are some other measures that they introduced, consultations to enhance disclosures, combat evasion. They did say they're going to establish a minimum wage of $15 an hour, rising with inflation. So that's something to be aware of with the provincial and territorial wages. Ontario is now at $14.25, so businesses will need to take that into account. Next slide. So personal tax measures, COVID-19 benefit repayment, they enhanced the Canada Workers Benefit a little bit and scaled it back when it declines. Eligibility for disability tax credit and northern residence deduction, and some minor changes to those that receive income that were taxed on it but weren't actually getting RSP room, that were doctors that are vital in this frontline workers. Those people are able to get some RSP room back. So next slide. For those that are elderly, we know they've been hit significantly in terms of their benefits and long-term care, so on and so forth. OAS payments, one time of $500 for those over the age of 75, and they're going to increase the OAS payments for pensioners 75 years and over by 10% on an ongoing basis as of July 2022. So that's helping our seniors that have contributed in the past to this economy. The climate action incentive payments are going to be made quarterly, so you don't have to wait till you file your return, and that's going to start in 2022 as well. Next slide. So there were some indirect tax measures, nothing significant, but one of the things that Hugh and Minister Fortier talked about was the retail tax on luxury cars over 100,000 and aircraft over 200,000 effective 2022. So it'll be 10% or 20% of the value above 100 grand, or for boats, $250,000. So be aware that this tax will apply, and then you'll have to pay GST and HST on top of that tax, on top of this luxury tax as well. So next slide. This one is, as we look around in Ottawa and in the National Capital Region, for sure, we've seen pricing and housing skyrocketing. And this is to make sure that, the unproductive use of housing by non-residents, foreign non-residents, doesn't keep increasing. So there's going to be a 1% annual tax that's going to be levied on them beginning in 2022 for residential real estate. So that's a measure to try and probably cool down a little bit, but also expanding what's in BC. The indirect tax measures that came in, digital services, there's going to be a tax on people consuming, Disney, Netflix, those kinds of things. And the sin taxes are always a common thing that's hit tobacco, and now they're going to look at vaping products as well, including for cannabis. Next slide. And so some final thoughts. This budget was good in terms of helping and making investments in critical areas, continuing to support the recovery of the economy through the hiring program, to the extension of the CEWS, and making sure that there's childcare that's going to be there for people to re-enter the workforce. So we look forward to some more details that are going to be put out by the government, especially in terms of the investments that can be made through capital investments, and for helping grow some of the small businesses as we look around the region. So if you have, if there's more that we'll share as they become available, and as you see more from our firm, we'll distribute it through our website and other platforms. So thank you very much for having me here today, and I'll turn it back over to Michael.
Thank you so much, Gavin, for that expert analysis. Budgets are very technical documents, and that's exactly why we need you and MNP as part of this event to ensure that we get the details. In fact, I watched hours of media coverage last night, Gavin. You touched on a whole bunch of points that I hadn't seen before. So thank you to Gavin Miranda, and thank you to MNP for supporting this event. Hope to see you soon, Gavin.
Thank you, Michael.